In this video I will show you a repetition of an experiment I did exactly a year ago. In that experiment I tested the performance of the best performing trading algorithms that I found over the 2023 crypto market and also compared that result to a buy and hold strategy where I just bought $1,000 of Bitcoin and hold it throughout the year. For the people who want to see that video, it was called Bitcoin versus algorithmic trading, and I will leave a link in the description below. Now in this video I will present you with a similar experiment. I will take the best found algorithms and I will test their performance over the course of 2024's crypto market. Now be aware that the results I show here are based on my configuration and my pairs I have configured for backtesting algorithms. It will most probably be not what you will see on your setup and your preferred pairs to trade, because there are a lot of parameters involved in these tests and even the slightest difference could also lead to great differences in backtest results. So don't complain if you do not have the same results of what I show here. You are warned. Now for the setup of the experiment, this time I want to do a couple of comparisons. The first comparison is that of my setup and configured pairs that I always use for the original backtests. I always do tests over the same pairs because that is the only way I do a comparison between different trading strategies. If I use different pairs with different characteristics and gains or losses, then I'm not able to compare end results between strategies. I'm sure you understand this by now. So with the original setup and pairs, I will use the date range of January 1st, 2024 until January 1st, 2025. And I will test the best found algorithms so far that you will see on the strategy league. And by the way, these pairs were the best pairs in the top 50 coins of January 2022. The second and a new comparison test that I will add here is to take the coins that were in the top based on market capitalization and available to trade on Binance at the start of 2024. So in this case I had to take the coin market cap snapshot of December 31st of 2023 to determine those pairs. The third comparison of course is the investment of $1,000 in Bitcoin at the start of 2024 and see how much it gained or lost at the end of the year, and then compare it as a baseline with the results of these strategies. And also in these tests only spot trading strategies are used, because there were no best future strategies found so far, but you can probably alter these algorithms to also go short. But again, this is not tested and completely your own responsibility here. Here are the pairs at the top of the market cap at the start of 2022 and tradable on Binance, and these pairs I always use for my backtests. Now these next 50 pairs are tradable pairs on Binance that were also at the top of the market cap at the start of 2024. So in this case I will try to make a comparison if trading newer coins will actually benefit your strategies more than trading somewhat older coins. Now as far as the strategies are concerned, on my website dutchcryptodad.com you can find the current strategy league of the algorithms I tested so far. You can see that some of them are not analyzed because they are adjusted algorithms of versions that I tested earlier, and I'm not going to make a video or post about every variant as you might understand, but the ones that are tested also have links to their respective YouTube videos or Patreon links, where you can find the posts, the strategies and all the other output I have gathered through the backtests, so you can check my results. I tested the top 5 algorithms that have the best scores in my league. They might not have the highest profits or the lowest drawdown, but overall these are suitable for my own risk appetite and therefore score this high. And if you want to create a similar scoring sheet in Excel for example, then I have the perfect gift for you, because I've written down all the information in my book for beginning algo traders. And for those who do not have an e-reader, I also recently published a paperback version of this book. So if you want to start algo trading cryptocurrency and want to get to know everything about the subject, then this might be the ideal book for you to start your journey. Anyway, let's begin with setting the baseline with a Bitcoin investment of $1,000 at the start of 2024 and see how much we would have gained or lost at the end of the year. Now, for the people that have been in hibernation in 2024, Bitcoin absolutely surged after the halving and there was a lot of positive news about the adoption of Bitcoin in the world. Now for me, besides the halving, one of the most significant moves was its new all-time high in December, where it reached a peak of $108,000. Now if you would have bought $1,000 of Bitcoin on January 1st, 2024, then you would have a gain of 122%. and would lead your end result to a total amount of $2,220. And I think that's not bad for a year of sitting on your hands. Now, of course, the price of Bitcoin did not go up all the time, and from March 13th until August 5, it also had a drawdown of maximum 33%. So if you happen to have bought $1,000 of Bitcoin in March, then in August you would have a net worth of less than $700 on your trading account. So by doing this, we have set the stage for our comparison with the best algorithms. Investing $1,000 of Bitcoin would eventually earn you money. Let's start with the results of the backtests from the 5 best performing trading algorithms with the classic pairs. This test can give us clues if these original backtests really prove some value and realistic insights. I will present these in alphabetical order and start with the combined NFI6 SMA algo. Let me begin with the equity curve here, where we can see how the algorithm builds up its end balance over time. This curve illustrates the success of a trading strategy by showing periodic gains or losses and the total outcome over time. This strategy demonstrated strong performance during the 2024 bull run, but early year losses and its reliance on bullish conditions might underline the need for further optimization to ensure resilience in varied market phases. The drawdown dipped steeply at the start of the year and remains negative until around mid-year. The average drawdown of minus 1% seems manageable, but masks the severe individual drops. Overall, we might have been lucky that this was a very optimistic year, because in bearish years this might cause significant concern. Now, the amount of trades made is 478, and they were mostly short with an average duration of 4 minutes. Overall, the strategy performed well, but did not beat the Bitcoin baseline performance. Positive is that the max drawdown is only around 5.5%, which is a positive thing in comparison to the 30% drop in Bitcoin price. And I think this is a good mixture between risk and reward. The only bad thing here is that it started with a loss in 2024, and that bad start could be a reason for people to replace this algorithm for another one during the rest of the year. The next trading algorithm is the AFILIATE V8 Original, and let's start directly with its equity curve and trades chart first. The cumulative profit line shows a steady rise through 2024 with a sharp incline at the bull market top. This indicates a strong performance during bullish conditions, but these flat periods in mid-2024 might suggest that the algo struggles to find profitable trades during consolidation or less volatile phases. The drawdown on this daily timeframe chart seems to be the most significant issue. It shows an average drawdown of minus around 3% and a maximum that exceeds well over 6%. And this extended period of deep drawdowns during mid-2024 again indicates poor handling of market reversals or consolidation phases. However, it's not all doom and gloom, and maybe I sound a little bit too critical here, because it is still a drawdown after the first major gain of the year, but still something to consider. The interesting thing of this algorithm here is that the average duration of trades was only less than 2 minutes. And this shows that the algo relies on extremely fast market movements, which also might raise concerns about execution risks and effectiveness in slower market conditions. Unfortunately, with this fast profit taking, it seems that it does not manage to take the time and let the profitable trades run a little bit more. And these quick into and out of the market settings did not manage to make the drawdown better than the previous version. Now, it did make over twice as many trades more as the NFI6 algo, but at a cost. Now, let me discuss the results of the overall second best found trading algorithm, the NASOS version 4. On this weekly chart, it looks to be that this trading algorithm has a somewhat similar characteristic as the AFILIATE V8. However, instead of a mid-year slump, it looks to be that this algo manages to create profitable trades, which is pretty impressive. If I take the drawdown chart into consideration too, then it is clear that after the first quarter of 2024 suffered a little bit from changing market circumstances, but it regained its balance and from there on also got profitable trades in sideways markets, where the previous two algorithms were lacking. And as you can see in the trade duration distribution chart, the average period of open trades was around 7 minutes. Now, the majority of gains was the result of trading stop losses that were hit, and if you are a regular viewer of my channel, then you know that I have my doubts about the use of TSL in backtests. So always do your own due diligence and research before using these algorithms with actual money, and do extensive forward tests before putting your real money on the line. Nevertheless, if we assume that this is a realistic test, then this algorithm is the first one that outperforms the Bitcoin baseline and manages to make more money than buying Bitcoin with $1,000 at the start of the year. And with a max drawdown of slightly above 7%, you also had good risk management in place as well. Now let's discuss the NASOS 5 Mod 3 algo and its performance. And right from the start, this seems to be a profitable trading algo. However, it did not manage to have that nice of a steady incline in profits in the midsection of 2024, and it got a drawdown of around a maximum of 10%, with an average of only 2%. But that was only in the second quarter of 2024. The other periods it had only a steady incline, with sometimes no trades at all. Interestingly enough, this strategy is also profitable with almost all pairs used. There are only a few that respond bad to the trading rules of this strategy. And again, we can see that this strategy makes use of the trailing stop loss as its most profitable exit strategy. The trades have an average duration of around 22 minutes, and over 60% of trades are exited within this time window. This makes the performance with only 385 trades slightly better than the buy and hold strategy, and also risk management with this algo is better than buy and hold too. And this brings us with the last algo tested with the classic pairs, which also happens to be the best performing algo I found in my classic backtest dataset, the NFI 5 Moho. Now to begin with the equity curve, this algorithm also managed to have a hypothetical steady incline in profits all over the year. The best thing about this algo is that there are drawdowns, but they are at a maximum of 3.5 to 4% or so, which is great risk management. You do not have to worry about losing your profits in this case and see it all flow back to the market again. The average duration of trades here is around 3 minutes and profits are quickly taken, as you can see. Now, because this algorithm also have multiple exit signals programmed with tags, I can also show you the average duration of each exit signal. And you can see here that if a trade is on average longer than 10 minutes, it could well be that it is a losing trade and reaches its stop loss. And I think that this is valuable information to improve the algorithm even further. Now, the biggest negative thing here is that this strategy does not live up to its standards, and it is actually the one with the lowest profits, although the drawdown is also one of the lowest so far. And this chart shows the end results of the test so far if I would have traded the classic pairs of 2022. In reality, I tested the Elliott wave the last, so I can now make use of the overall chart to see which algo has the highest gains overall. First of all, we can see that the NASOS 4 has the highest gains. And the second thing here is that in the middle part of the year, all these algorithms suffer a little bit from the sideways market. That also made lower lows overall, as we can see on the chart of the total market cap of crypto over here. On the profitability metrics chart, we can see again that the NASOS version 4 has the most profits, but got a second place on the highest winning percentage. The first place goes here to the NASOS version 5, and it also scored best on the profit factor. But eventually, most crypto pairs got in the green with the NFI 5 Moho algorithm. Now, as for the risk-adjusted returns metrics, for almost all ratios, you would have been safest if you would have used the NASOS version 4. All other algorithms scored more or less randomly over all the ratios. So if you would have used the pairs that I always use in my backtest to prevent survivorship bias as much as possible, and you used the NASOS version 4, then you would have done better than a Bitcoin buy and hold strategy in 2024. But this is all in hindsight, of course. Now for the results of the other test I was curious about. Let's say that we have known the best algorithms at the beginning of 2024 and wanted to trade the highest market cap pairs in the coming year, that were available on Binance to trade with, of course. Would you then have outperformed a Bitcoin buy and hold strategy? And I think that this is a great test to see if actualizing your trading portfolio to more current and popular pairs will do better than using first, second or even third generation crypto pairs. So let's start again with the algorithms in alphabetical order and see if we get an overall better performance than a Bitcoin buy and hold strategy. You can download this all from my Patreon site if you want to check and replicate all these tests on your setup. This way I try to be as transparent as possible. Now with the combined NFI6 SMA algorithm, there is not a spectacular difference in the way the equity curve is created. However, there are some noticeable things that caught my eye. For example, the newer crypto pairs had a better start at the beginning of 2024 with a pump, and this helped to generate a less drawdown right from the start, so the algo performed better here. The second drawdown was a little bit heftier than I expected, and this might be caused by more trading and thus more profit taking over these more popular coins. And I suspect that trading these popular coins also caused a big pump in October too, and this made the strategy perform better than with the classic crypto pairs overall. Now looking at the profit contribution of the newer pairs traded, we can immediately see that meme coins here have a significant impact on the performance of this algo. And I expect to see this with the other algos too. Now in the end, actualizing pairs would have made this strategy perform better, but still not better than the Bitcoin buy and hold strategy. As for the Elliott wave strategy, this has a totally different result and also pretty much surprising to me too. I expected to see this perform better, but I guess I was wrong with my assumptions because as you can see here in the equity plot, trading popular pairs and thus highly volatile pairs in a sideways market can cause big and unwanted drawdowns. This drawdown started around March and was way longer and deeper than if you would have traded the classic pairs. Now if I compare the performance chart of these two tests, then I might see what have caused this difference, and I saw that the test with the classic pairs got a huge profit on AMP, and with the newer pairs the backtest did not cause such a similar pump, and this might give a more realistic view on the performance of this algo. But if I take this AMP pump out of the equation, then still the losses would be much greater and over more pairs traded with the newer 2024 pairs. You would have made barely money with this algo in 2024. And if I also include inflation into the equation, then your invested $1,000 might be even worth less at the end of 2024 than at the start of the year. So let's go quickly to the NASOS version 4 algo that performed best with the classic pairs. Let's hope it performs even better with the more current pairs. And unfortunately and interestingly enough, trading with this algo with the newer pairs also results in less profit than with the classic pairs. Again, after March it suffers a much deeper and longer drawdown than trading classic pairs. Looking back to the equity curve again, it seems that more profits could have been made with the new pairs because the inclination looks a little bit more steeper than with the classic ones. But because of the bigger drawdown at the beginning of the year, it had to climb from a much lower point. And this proves again that drawdown is a factor that really has to be taken into consideration if you want to choose the correct strategy. Drawdown can not only eat away your gains, but it can also make you start from a lower equity point. Your strategy has to make up more ground to get at least a little bit even, compared to a less aggressive but winning strategy. And this is clearly visible in the weekly win rate and profit distribution. With the new pairs the win rate is much higher and closer, which means that overall there are more winning trades in a narrower distribution. But because the profit distribution with the new pairs is also tighter and even experienced some negative outliers, so these winning trades had to work much harder to get at least close to the classic pairs end profit. And this time, unfortunately, this algorithm is not scoring that great if we were to use the more current, well-known and perhaps more volatile pairs here. Luckily for us, it's not all negative news here, because the NASOS version 5 does manage to improve its profits when using more current pairs. Both equity plots look very similar this time, and the most significant difference here is that the 2024 pairs managed to attain profits around $1,600. The drawdown plots also are almost the same, with the exception of a longer drawdown period of the classic pairs in July, and in both simulations they even caught a big negative week at the end of December. So these results are very similar here. Another exception with these new pairs is that the algo now could profit from the popular meme coin hype too, which is clearly visible in the contribution of Bonk to the overall profit. So this time the NASOS version 5 is clearly winning from the Bitcoin buy and hold performance, and this makes me very curious about the results of the last tested algorithm with these new pairs involved. The performance of the Nostalgia for Infinity 5 Moho trading strategy with newer pairs has an almost identical equity curve in comparison with the classic pairs. However, it ended slightly higher than the earlier test. The first drawdown period in 2024 looks to be longer and deeper than with the classic pairs. Especially in the second half of 2024, the newer pairs seem to have less drawdown than the classic pairs. But let's just keep it real here, because just like with the classic pairs, newer pairs will not make this strategy perform better than the buy and hold strategy of Bitcoin. So let me take the backtest comparison I make with the AFILIATE V8 strategy, because that test also contained the test results of the other strategies as well, and comparing the performance of these algos that use the more current 2024 pairs, we can see here that the NAS/OS version 5 has the most profit. In the profitability metrics plot, we can also see that the NAS/OS has the best cards in hand. However, looking at the risk-adjusted returns metrics, then we see that it does not score high, especially on Sortino and Sharpe ratio. But at the performance over time, it is at the top again, which makes it the winning algorithm of this test with the actualized pairs in my trading portfolio. And if I compare these two tests, then the version 4 and the version 5 of NAS/OS switched places, and with an end score that really lies close together. So, after this test, what are my conclusions so far? Well, first of all, and I cannot repeat this often enough, this is only a hypothetical exercise over my own setup and the pairs I showed you in the beginning of this video. Your results might differ, and backtesting does not guarantee anything, just a probability about the success of an algorithm. So please also test these algorithms out in forward tests to see if they actually perform well. And only then start doing real trades with small amounts of money at first, instead of aping into algo trading with your life savings. I cannot stress this enough. Now, having said this, my conclusion is once again that buying and holding Bitcoin over the course of last year proves to be a very profitable strategy. However, by using a buy and hold strategy, you also add lots of market risks because of the large drawdown you had around the half of 2024. This requires diamond hands and whatever attitude, and expecting that prices will go higher again in the future, which is absolutely not guaranteed, of course. And this is of course easy said in a halving year where everybody and their mother expects that prices will soar after the halving. 2025 might give similar situations as well, but who knows what happens after that. So, having a trading algorithm that might be not as profitable but will protect you from market risks and high drawdown could certainly be the better option here. It is the purpose of a trading strategy to gain profits and keep these by getting into and out of the market in time. Also, I do not want to be too negative about these tested algos, because under sideways and somewhat bearish circumstances, some of these still managed to gain profits. Not as much as I hoped, but still better than seeing a 30% drop in your trading balance. Overall, these short time frame trading strategies did not catch all of these large profitable price swings because of their quick take profit settings too. I think this was their Achilles heel. Adjusting parameters to better catch these large swings might be a good idea, but also comes with risks and more losing trades and possible high drawdowns too. So be careful when you adjust these settings. You might be better off using another bot with a swing trade strategy to catch these waves in the meantime. I personally have the opinion that diversification is the best idea. Putting $500 or even $1,000 in Bitcoin and $500 or $1,000 in an algorithm to catch other profitable trades here is the best way to go. And this way you can benefit from both these methods. Losses in one vehicle can be negated by wins in another. And when you even diversify in trading strategies that fit multiple market circumstances, your future might be even brighter. Now about changing the original crypto pairs for those that were better positioned in the market cap at the start of 2024. At first my thoughts were that using newer coins would lead to better results, because these would be traded more often. But I did not think that this added volatility also would result in higher drawdowns. And as a result, these algos had to work much harder to attain a comparable end result than with the original pairs. In the end, it did not matter much. However, if I were a beginner and wanted to start a new trading bot with one of these algorithms, then I had to start somewhere and had to choose which pairs to trade. It would not be logical to trade coins that were popular 3 years ago. So in the end, the probability that someone just starting would end up with the pairs I just tested could be pretty high. By testing the differences between older pairs and current pairs, I now know that it does not make much of a difference. So I definitely have learned something valuable by doing this. But after all things said and done, I still believe that trading crypto with these strategies and algorithms have certain benefits that you will not find anywhere else. Therefore, I will still go on to find the best trading strategy or algorithm for crypto trading in 2025 and beyond. And I hope that you will join me in my journey too. Let's make a bright future together. Thanks for watching, and I will see you in the next video. Goodbye.